All right. Welcome back to Friday, May 8th. Today we are bringing you a special update, a special real estate market, everything that has to do with commercial real estate. If you don't know who I am already, my name is Maxim Cruz. I don't know what happened there. Just close this off. Sorry about that. My name is Maxim Cruz, and I am coming live to you from Miami, beautiful Miami, Florida. Hopefully, you're doing well with everything that is going on, and hopefully, you're excited to get back to some normality and get back to business. So, without further ado, let me again reintroduce myself. My name is Maxim Cruz. I am a commercial real estate broker that primarily focuses in income producing properties. I help investors buy and sell income producing properties. And with everything that's going on, not only do I keep track of what's happening in the local market, I also have to kind of keep track on what's happening on a nationwide as well as kind of an international scale. So let me just get my preview right here. So the way that I've organized today's video is pretty simple. First, we're going to go into kind of the commercial real estate practice, and I'll show you why it's so difficult for individuals to kind of get the information. Second, I'm going to give you an update in the market areas that I focus on, which is Doral here in South Florida, as well as Aventura. If you're not familiar with it, okay, that's not a problem. It's within Miami-Dade County. Those are just two districts that I focus on. Then we'll move on to kind of what's happening, general South Florida update the last 6 months. And then we'll go into the residential market, and I kind of give you an update on that. I don't primarily focus on the residential, single family, condo, townhomes type, but we keep an eye on it because, again, if people are buying residential real estate, that means that people are moving, that means that they're working, so it's all kind of tied together. And then we're going to kind of wrap it up on some resources that we have available as commercial practitioners for kind of nationwide data on what is going on, as well as a few articles that I wanted to share. And again, once we're going through the slides here, you will see my link at the bottom. It is maxcruzrealtor.com. You can go there and you can see my contact information. And if you want any of these resources, I'd be more than happy to share these resources with you, so you can utilize them for your behalf. Again, just another disclosure, I am a licensed real estate broker, but this video is for informational and educational purposes only. If I do say my opinions about sort of investments of what's going on, those are just my opinions. They're not investment advice. So if you're looking for investment advice, please tune into your licensed investment professional. And again, if you do want to work with me, you have the option of contacting me, and we'll do that. So let's go ahead and jump right into it. And the first thing will be kind of the commercial marketplace. So the commercial marketplace with what it's going on. Okay, let me see. I don't know why, but you can't see my browser. We're having some technical difficulties there, but all right, give me 1 second. Let me go ahead and adjust my browser here. Okay. All right, let's see if this works. Nope. This is still not working. Okay, give me just 1 second. Okay, here we should bring it up right about now. Nope. Okay, as you see, we're having some technical difficulties, so Hopefully we can bring this up fairly soon here. All right, looks like that came up now. Awesome. Okay. So let's go ahead and share this with you. I believe you are seeing my screen now. Let me just go ahead and double check it to make sure that you are. Okay, so I appreciate your patience while we're looking through this. So yep, looks like my screen is on now. So let me go ahead and start giving you the information about what this is about. And again, as you watch the screen here, you'll see that my website is down below, and you can contact me there at maxcruzrealtor.com. You can text me, WhatsApp me, email me, whatever works for you. So let's get right into it. This slide right here, the main reason that I wanted to share this, this was actually an update recently done by the National Association of Realtors, and pretty much they are sharing commercial specialists by state. So as you will see here, if you identify your state, we see that Guam, which is actually outside of the continental United States, is 19%, and then it goes down to there. And then Florida, which is the state that I specialize in, is 5%. So why does this information matter? This information matters because that means that out of all the practitioners that are out there that might call themselves real estate professionals or realtors, whatever designation you want to give them, there's a very, very small population that actually specialize in commercial real estate. Now, of course, as technology has changed, more and more data is available for residential, like Zillow, Realtor.com, Homes.com. All these websites are available, and it's readily easy to find the information. Unfortunately, for commercial real estate, we're still working on some of the things. And again, what ends up happening is a lot of these transactions are very, very private transactions, and sometimes they're in the multi-million, if not billion scales. So the only way to really track them is to track the recorded deeds. And again, whenever you have leasing going on, which is the rental side of commercial real estate, sometimes it's difficult to track, because unless you're actively working in that building, unless you're actively working with the clients, it's hard to find that information. So that is something that hopefully can encourage you, if you're a commercial practitioner, to do these type of videos and also share the information with our clients. So let's go ahead and next dive into the Doral market update. So as I mentioned, I focus in the Doral area, and these are some statistics for what I have. So actually, let me turn back my camera here so I could share something with you, because I wrote it down. So for Q1 sales, I've categorized it into 4 categories: commercial, multifamily commercial Q1. So this is January 31st until March 31st. We had 1 multifamily sale. Commercial land, we had 1 sale. In the industrial type of property, we had 13 sales. And then office type property, we had 2 properties that actually sold. And this is according to the deeds that were recorded within Miami-Dade County and things that we have access to. In April, the month of April, we had 1 multifamily sale that was actually at the $100 million price point, 303 units. Land, we had 0 sales. Industrial, we had 11 sales. Office, we had 0 sales. Another market that I also focus is the Aventura, Florida market. So again, I'll give you some of those statistics. Q1 in general, multifamily, we had 0 sales. Land, we had 0 sales. Industrial, we had 1 sale valued at $18 million. And then offices, we had 16 offices that sold. These are existing buildings that were placed in the registry of deeds, averaging from 13 million all the way down to about 300,000. But again, I personally am involved in some pre-construction projects that those deeds are not recorded until the builder has closed the permits on them and we have received the certificate of occupancy. So again, we've had multiple offices that sold there as well. In April, multifamily, we had 0 in Aventura. Land, we had 0. As you know, there's not really any land available in Aventura. Industrial, we had 0. And offices, we had 2, ranging from 250 to 850,000 for the office sales. So again, these are existing buildings. This is not talking about pre-construction. Now, according to the multiple listing service, as you see right here, this is actually what is called a 1004 MC. This was an old form created by Fannie Mae in 2008, and pretty much the appraisals used them for a long time to kind of track the market change conditions. To my understanding, this format has kind of been dealt away with a Fannie Mae requirement for appraisals, but real estate professionals, we still use this form and this market study just to kind of see the market change of what is happening. So let's go over here and take a look at this. So in the Doral market, we had pretty much 0 multifamily sold. So I went ahead and did it kind of following the same method. Then we looked in the Doral market as far as land, what has sold. Here you could see that in the last 3 months they recorded 1. But actually in our, looking up by the deeds, we had 1 recorded as well. One of the things that we look at is this months of housing supply. This number is obviously accurate right now. There's 0 months of supply because there is no really active inventory that's selling. But again, the way that those numbers are compiled is just a mathematical formula that's taken on how many active listings they are, how many listings have sold in the previous months. So for example, if you have 20 active listings, but in the last couple of months you've been selling an average of 10 listings, you have about 2 months of supply. So in this scenario where 1 sold and we have 0 listings, you get 0 supply. But again, the MLS, it specifically tracks on what realtors have posted on the MLS. It doesn't include private sales. So that's why, we use other resources that us commercial practitioners have availability to track what is going on. So the MLS doesn't always reflect 100% of what is happening in the market. So I think that's important for you to know. All right. So the next slide here, we are looking in the Doral market, again, commercial, industrial, and this kind of combines all these property types together. We see here that you actually had 8 comparable sales. The absorption rate, as you see, it's roughly 3 sales per month. And then again, pretty much there's no kind of current listings that reflect that. All right, so let's go ahead and look at Aventura now. Q1 Aventura multifamily was 0, which reflects what the deed record said. Then we had the Aventura land. Pretty much in the last 2 to 6 months, we saw that there were 2 recorded as sale. Now, another point that I'd like to point out here is that sometimes people on the MLS, they will put it as land, but it will be land for lease. So in our previous search, where we did not see any sales in Aventura, this MLS is saying that there were 2, so those were probably land leases. So that is how we can track the differences of what is going on and happening there. Okay, so let's continue in the industrial and kind of the commercial style property. Here you could see kind of what was sold there. Again, in this scenario, what we see here is that sometimes these were probably leases, not necessarily sales, because again, the median comparable sale price of $37.50, I can guarantee you that you can't buy anything in Aventura for $3,750, so that's definitely a lease. So that is what is happening as far as the commercial market goes in the Aventura as well as the Doral marketplace, which I focus on. And now we're going to go into and look at some of the things that are happening on the residential side. So on the residential side, what I did is I kind of took a broader view of what's called an MSA. An MSA is the Metropolitan Statistical Area, which in our scenario includes Miami-Dade County, Broward County, as well as West Palm Beach County. So those three counties, we're looking at it together to kind of track the statistics and see what's going on a county level as far as residential goes, as far as kind of a metropolis, which is what we are. So let's go ahead and take a look at these numbers now. So first thing first, let's see. Okay, we got past those. All right, first thing first, March of 2020. So even though this is being recorded in May, we still don't have all of the statistics collected for the month of April. So sometimes it runs about a month behind. But pretty much what we could see in March of 2020 is that for the residential single-family homes in the Miami, Fort Lauderdale, and West Palm Beach area, and then you have this outline of kind of where the map is, we had 3,996 closed sales. In comparison to last year, in March of 2019, we had 3,959 closed sales, so we're actually up 0.9%. So what you can see here is the closed sales in the bottom. You can see that month over month, the numbers have been looking pretty good. We had 2,957 in January, 3,121 in February. So as you see, the sales have been consistent even with everything that is going on. On this next slide, we could see here what is happening with cash sales and what percentages of cash sales are happening here. We're seeing it's about 938, which equal to about 23.5% of the market. So that is very healthy. The median sale price right now on single family homes, as you see, it is $380,000. It is up 7% from last year. And then the average sale price the average sale price, what we're seeing here is $566. So again, in the single family home market, you just need to be aware that the average sale price varies from the single family homes that are luxury style that might have sold for $3-4 million all the way down to kind of the distressed property that might be worth $80,000. So again, they do an average of all the properties that sold there. So we're seeing those numbers. Next, we kind of look at the dollar volume overall in the month of March. We had $2.3 billion of sales in Miami, Fort Lauderdale, and West Palm Beach County, the metropolitan statistical areas. So that's about 11.6% higher than what we had last year. And as you see right here, median percentage of original list price received, March of 2020, we're within 95.9%. So that means that the properties that are being listed, let's say you listed your home for $100,000, the sale price is coming in at about 95%, which would be $95,000. So again, they're selling very, very close to the price point there. So let's go ahead and continue. Medium time to contract. This number is also very important, and you'll be seeing what's happening here. March of 2020, it's actually gone down to 46 days. It's down 23%. So this is very, very good, especially for the sellers. That means that buyers are actively looking and buyers are putting those properties under contract, and the sellers and the buyers are agreeing to transact in a much, much quicker time frame. So that's what that number means. Average day time to contract right now is 46 days. As you see, the year today is 53. Median time to sale. So this number is actually the time frame from the time that the property went under contract or was posted on the MLS to then actually being sold. You do have inspections, you do have sometimes financing contingencies, XYZ appraisals that have to happen. So that's what that time frame means. Then we're still seeing that number is going down 88 days. So the banks are processing those loans and we're closing in on time. So we do have a whole bunch of other things that I could share and we could go into it. But I'm going to end on this slide right here. Inventory of active listings. Right now in March of 2020, the inventory is 17,405, which is down 17.4%. And as you see, the month supply of inventory based on the sales that we've been having is also down to just 4.4%. It's down 21.4%. So what does this all mean for you? So what this probably means for you in the commercial sector is that, buyers are moving in. People are transacting. People are selling their home and people are buying their home. We have movement in the market, right? Obviously, the employers and things of that nature, some of them are still shut down. Some of them are working from home. Some distributors, some industrial areas are still working. So, you have a fluctuation in that. But overall, people are still moving here to South Florida for multiple reasons, job reasons, commercial reasons, tax reasons is a huge one, which we'll jump into a little bit later here. But there's activity in the market, and with everything that is happening, we are going to run out of inventory. So hopefully things can go back to normal, so we can meet with more sellers that are for those real estate residential practitioners. They can meet with those sellers who want to sell their properties, and they can go ahead and sell them. Because again, the month supply, as you're seeing here, is going down. Also on the commercial end, that's a good thing for the sellers because again, it's driving up price. And actually afterward, I'm going to show you a study done by Nationwide, National Association of Realtors, on what's happening with cap rates. Okay, so let's keep on moving here and look into the next section. So right here, this is Townhouse and Condos. I'm not going to spend a huge time on this because this is really not my specialty, but just will kind of corroborate the same numbers as far as single family. Close sale homes, you had 3998. Last year we had 3910, so we're up 2.3%. As you see, kind of month over month, we're still higher than we were in some time before. The cash sales, what you're seeing here, about 50% of the condo sales are cash sales. Median sale price is $215,000, so that's up 11.4%. Average sales price is also up to $341,000. That's up 5.9%. The dollar volume, we had $1.4 billion in sales. That's 8.3% change year over year. And then the median percent to original list price, that's pretty much, again, corroborates with the single family, sold at 94.4% of the list price. Median time to contract, you're seeing here, is 58 days. The condo median time to sale is 100 days. This is pretty typical to see in a condo scenario because, again, with condos, you have condo association, you have condo approvals. Sometimes there's a move-in, move-out process, so it takes a little bit longer. I think in the residential, it was roughly 90 days. So it's still right there. It's still very, very close to what we're seeing to the time frame of the things that sold. So let me just end on here. As far as the supply, let's see here, inventory of active listings, as you see here, 29,227. Again, we're down 8.5% from year over year. And then the month supply, the inventory supply, we're actually 7.8 months supply, so we're actually down in inventory there. And another interesting fact that is going to happen here with the condo market and kind of also as well as the single family market, with everything that's been on hold for the last couple of months, there's been delays in construction materials, construction labor, XYZ. So because of that, there's also going to be delays in delivering these new units to the market. So what we're seeing here is if the population continues to increase as far as the number of people moving here to South Florida, but the inventory is going down, you have a supply and demand issue. So what that's creating is, that's going to drive up prices, as people continue to move here down south. And on a previous video that I did on the January outlook, we saw that U-Haul had actually reported that more people were moving into South Florida than they were in Texas. So the state of Florida had surpassed Texas for the first time, which again is a good thing because a lot more people are looking to move here to South Florida versus Texas. So we were number one. So let's go ahead and continue with a couple of articles that I wanted to share. And again, right here, right below is my website, maxcruzrealtor.com. This website is still being developed, but you can go ahead and contact me there, and I'd be more than happy to send you all of this information for your use. And then again, this video will actually be posted there with some of these references going into it. So that's what we have there. So let's take a look at this article right here. Did the pandemic and the open office space trend? And with the subheadline reads, open layout workspaces may be prime targets for retrofits as companies try to shield workers from COVID-19. Could the office cubicle make a comeback? So this was actually published in New York. As you know, WeWork is a pretty big company that has been kind of in the front of this shared working space market. But again, in everything that's going on with the office, it's very, very interesting because the trend was going to these micro offices where you have shared working space, you have multiple usable workspaces, etc., to now possibly going back to cubicles for social distancing, for safety, all of that stuff. So how does that affect the office market? Over time, we've kind of been seeing that these large employers that were moving from Chicago or New York down to Atlanta or down here to Miami, they were leasing these offices, 100,000 square feet, and they've gone down 50,000, 20,000, 10,000, etc., etc. This might actually help the office market where we might see a comeback in this larger office space so people have their distancing. Also, you have obviously the work from home environment. So, a lot of people, a lot of corporations might still be on this track of having kind of this medium-sized office, 20, 50,000 square feet, and having some of their individuals work from home for safety reasons and other reasons, etc., etc. So I thought that was a pretty interesting article on what's happening there. Another article that I wanted to share with you here, it says, consumer confidence declines sharply again in April. So obviously consumer confidence going down is not a good thing, but here we see that the subtitle, the index now stands at 86.9, down from 118.8 in March. However, the expectations index, consumers' short-term future outlook, improved from 86.8 to 93.8. So pretty much what does that mean? That to me, as a commercial practitioner, as an individual, it just means us feeling safe to go out there to spend our hard-earned money on things that we need, and overall just to return to work and improve the conditions of everyone and everything else that we have going on. So that's kind of what that article is talking about. Okay, so now let's move on to some of the things kind of on the nationwide thing. So here, as we saw, the Economist Outlook. This is May 7th. I actually read this morning, and I figured I'd post this because this is a very interesting website. Signs of slowing unemployment. More than half of states had fewer jobless claims for 4 weeks in a row. And what I liked about this is you can actually come here on this website and you can click on the different states. For example, Florida. Oh, that didn't like that. So Florida, the claims went down 60%. Here we go. California decreased by 2.2%. Let me click on Florida again. So layoffs decrease in the state by 60%. Advanced claims 173. And then the other thing is right here on this chart, you can kind of track and see what the claims were in February, March, how we had this spike. Then we had this large spike in the middle of April, and now it's kind of going down. So this is actually given by, let's see, U.S. Bureau of Labor Statistics. So, I mean, you can kind of see how we had this very, very low trend for a long time and how we kind of had these spikes and now they're going down. So I think that's a good thing overall if we're seeing these claims go down. That might mean a couple of things. One, maybe individuals are returning to work. Maybe they're finding other source of employment like work from home, telework, and etc. Or overall, which I've heard, some people have just given up on this unemployment process, kind of riding out this wave. They've received their stimulus checks, or they've gotten some other things, or they're going through some savings, etc. And they're kind of going through their savings, waiting to return to work, and they just, forgot about this whole unemployment thing. So, all right, let's go ahead and go on to the next one. So this right here, again, I could send you all of these resources. This was just done in February. So again, one thing that I'd like to point out as we look at all of these statistics is when you look at statistics, we need to understand that things take time to be populated into the system and for us to be aware of what the numbers are. I don't want to say the real numbers or the unreal numbers, but actual recorded numbers versus kind of assumptions and projections. So when the real numbers come in, those numbers might be delayed by a month or two, especially in economy and things like that. It's kind of different being in the trenches, working in the real estate market, seeing the activity that's happening day to day. Same thing with the stockbrokers, etc., versus kind of looking at it over a year period and kind of getting these outlooks of what is happening. So again, as we look at these reports, just have kind of an open mindset. This was done in February of 2020, but again, we had some information from January of what was happening. One thing that I did want to point out is this line right here. It said, in 2020, 61% of respondents who worked with an international client expected their international client to stay the same in 2020. So this was even after January. That was interesting. Another thing that I wanted to point out here is the international commercial buyers here in the United States, the dollar volume, 4.3 billion. That is a huge number. The other thing here is international commercial buyers. Where are they coming from? 2019, we saw again. China had 20%. Mexico actually went up to 11%, and then Canada went up to 8%. So that's kind of a good thing to know, to see where the commercial buyers are going to. Also, the other thing that we're seeing here, top states where foreign commercial real estate buyers are purchasing property. Florida, 25% of that volume is going to Florida. Texas, as you see, has gone to 14%, Georgia 11%, and New York isn't even on the map, right? Another thing that I wanted to point out here, and again, I could send you all these reports so you could read it. As far as international business trends, it said percent of respondents who reported the reasons clients did not purchase commercial property. 25%, so 1 in 4 commercial practitioners said that their client could not find a property to purchase. 22.5%, they said they had difficulty moving out of the home country to the United States, and 21% said that it was actually the cost of the property, and then there were other things like immigration, tax laws, property taxes, exchange rate, etc. So as you see, kind of the could not find a property to purchase, and had difficulty of moving the money were important factors here. Okay, another report that I wanted to share with you is this commercial real estate trends and outlook. So this was just updated in April of 2020. So again, just as I said, kind of take this with I don't want to say a grain of salt, but this is actually what has happened. These are based on the numbers that were recorded, and then these economists, these individuals, these professionals are trying to kind of have some outlook and some forecast on what's happening and kind of track the data. So let's go ahead and take a look at the report together. So right here, this section I thought was very, very important, and let me read it to you. Economic outlook. We expect the second quarter GDP growth to be the steepest decline in the U.S. history, likely in excess of 15% contraction on an annualized basis. Now, this does not mean that real estate prices are going to contract 15%. This is just the GDP. What will be critical is the recovery in the second half of the year. Is it going to be sharp and quick rebound of a V-shape, or a sluggish recovery of staying low for a period before recovery of a U-shape? That will depend on the economy's response to the stimulus measure and the path of virus containment. The best guess is for the second half GDP growth to be insufficient to compensate for the loss in the second quarter. Therefore, we expect GDP to have contracted about 3 to 5% for the year as a whole, and net job losses around 3 to 5 million. So again, when we kind of read this outlook here, we can see that 3 to 5% adjustment. That I think is very, very optimistic, and hopefully we get there. 3 to 5 million of unemployment, job losses. I think that's a good number. So let's go ahead and continue reading into this report. So there's a few things that I want to point out here. The jobs and wages are obviously down. Leisure and hospitality has been hit the worst. So again, we're kind of seeing the number there. Commercial sales. Now, what's interesting in this number here is that it hasn't been impacting that much, right? In quarter one, so January 1st to March 31st, we saw only a decline of 1%. All right, so that's pretty good. Now it says here that commercial prices actually rose 1%. So even though we had a decline in the sales number, the pricing went up. Another thing here, which is what I mentioned earlier, is cap rates. So let me just turn back the camera here. So cap rates, if you don't understand what cap rate is, again, hopefully maybe you're a seasoned investor who's watching this, but cap rate is just the relationship between the cost of the property, the dollar value paid, versus the NOI, right? So pretty much it's cap rate equals to the NOI. Yeah, I don't know, this marker's fading out. NOI over the sale price. Over the sale price. There we go. NOI over the sale price. Pretty much what that means is if on an annual basis your income minus your expenses, your net operating income was $100,000 and your sales price was $1 million, you would have a cap rate of 10%, which again, if you know anyone that is getting a cap rate of 10% on some income producing properties, especially multifamily, please reach out to me, as we do have buyers interested in buying those. So let's go ahead and take a look on the study, what they're talking about these cap rates. So cap rates, as you see right here, they trend down. So what that means is if the cap rate is going down, the sales price is actually going up. The apartment class A is 5.4%. So multifamily class A 5.4, multifamily class B or C is 6.5. The industrial warehouses is 6.5%, and then the office is 6.5 to 7%, which you're seeing there. The retail strip centers, I'm actually surprised to see these numbers. I thought they would have been a little bit higher. As we're seeing, they're 6.5 and 6.0. The retail freestanding is 7%. So overall, it's very interesting to see how these numbers are adjusting. Commercial leasing, that would kind of be understandable that those are declining, because if people are stuck at home and less people are going into a workspace, there probably isn't much of a reason to expand your workspace at the moment. So we saw a decrease in leasing there. The vacancy rates have kind of been average. Obviously, the hotels, I think, are much, much higher. The rent growth is just incredible. It continues to go up. Commercial construction, again, a decline 2% because of the slowdown with everything that's happening. So, overall, with everything that is happening, we have all these reports available for you. The business trends, these were kind of a questionnaire of what people are seeing. That increased in the following developments in the primary market compared to a year ago. Senior housing has continued to grow up. Smart home technology has continued to grow up. Micro apartments have continued to grow up. And this group living has actually been interesting. Parking-free apartments is going up 31%. So that's pretty interesting as well. This number, I think, is quite in line with what we've been hearing from other economists, where people are looking to kind of get out of these urban road zones, kind of these big cities, and go into what's called the CBD, Central Business District. So construction outside these central business districts are up, 64%. Repurposing of retail malls, obviously we're seeing that more and more, 54%. Co-working flex space is up 47%. Opportunity zone fund investment is a huge number right now, 46% in that. So again, if you want, what's happening, and you want this survey, I'll be more than happy to email it to you. Just go ahead on my website there. You can text me, you can WhatsApp me, you can email me, social media, whatever is better for you, and I'll get you all of these resources. So kind of what do all of these things mean, and where are we going to be taking things from here? So as we read earlier, we kind of saw this trend of, we were probably up here in January, and then we kind of had this decline of some sort, and then we're probably here in May, and there are different terms that the economists use. So some of them use what's called the V shape, the W shape, the U shape, or the L shape. These are kind of the more traditional ones. So I've been speaking with a few of my investors. Some of them, are very what's the word? Not optimistic. The opposite of optimistic, pessimistic, and they're saying we're going to have an L-shaped economy. Most of the people that I talk to, they're either in this W or in this U phase. So what does that mean? The W phase pretty much means that you would have this kind of W shape that you continue to do over time. The V shape, let me just use a different color. So W, we'll use black. The V shape, we'll use green. So the V shape, again, is kind of having this trend, and then having a sharp incline like that, right? Like that's a V shape. The U shape, let's see, we'll use orange. We'll use orange for U. So the U shape is more kind of this tapering off, kind of coming to zero, and then slowly coming back up over time. And then the L shape, especially the negative L shape, which is what a lot of some of the pessimistic guys are thinking, is this kind of thing where we kind of get to this place where we hit this bottom, and then it just goes like this, for God knows how many months to come. So personally, I think everyone would love to see kind of this V-shaped thing where we kind of get to the end of this pandemic curve, which I'll kind of draw right here as what we're seeing. And then as it tapers down and people have this confidence of going back to work, they can go back in, and then everything just skyrockets and goes right back up towards where the economy was going. Personally, I think that is too optimistic. Personally, I think we're more on this W or this U shape, where there's still kind of these months, these quarters of uncertainty. We're going up, we're going down, it's adjusting here. And then I definitely don't think we're in a null shape. Now, the other thing is, for real estate specific, let's say we look at, I guess we would have to call this 14 year. You know, if we're looking at 2007, 2008, and we're seeing kind of this thing happening like this, and then we're seeing slowly coming up, coming up, coming up, and then we're here at this kind of 2020 mark. I mean, if we go back, you know, it pretty much looks consistently up and down, up and down. So historically speaking, from 2008 until 2020, we've had these 12 years of this bull run, right? We've had this 12 years that this, yes, I mean, on a macro scale, it might be doing this overall the whole time, right? It's having this W up and down jumps, whatever. But overall, we've been having this upward trend. And being here at 2020, we're saying, okay, what is happening? I don't know. You know, I don't know anyone that can predict and say, hey, this bull run is going to continue for another 10 years or another 4 years or another 6 months is just as good as somebody that tells you this bull run ended in January and it's all a downward hill. So we don't know. The only thing we can do is keep on tracking these statistics month over month, seeing the changes. The other thing that I do want to point out is the multifamily sector is very, very healthy. You know, I think the nationwide collection rents are like 83 to 87%, which is, you know, a good number. Previous to that, I think it was like 93 to 95%. So overall, you know, a large amount of people are understanding, hey, this is, you know, I'm stuck at home, I'm getting the stimulus, or I'm getting the unemployment, whatever. A lot of the multifamily investors that I talk to, they just say, hey, you know, I'm working it out with my tenants. We're seeing a way, we're working out a payment plan. There's a lot of confusion, a lot of misunderstanding on these, you know, not furloughs, but a lot of these, what's it called, forbearance, and what's happening with these mortgage payments as far as multifamily goes. So there's a lot of confusion around that and what's happening. Some sources are saying, hey, if you're a multifamily large owner and you don't take a forbearance, then you don't really have to comply with these laws as far as not evicting your tenants or proceeding with all that. You know, on some states, people are still going forward with evictions. The courts are starting to open back up. All of this thing is going on. So we're in a huge uncertainty thing, but we're seeing that overall people are optimistic about the United States. People are optimistic that things are going to go back to somewhat normal, to doing things, to being in business, to transacting, to getting their properties sold, to investing in properties, to holding them over time. And again, anyone that's a seasoned investor, if you're looking to do to become an investor, everyone is doing these long-term tracks. Unless you're a flipper or you're buying and selling properties very, very actively, people typically invest on a 5, 7, 10-year, 30-year scale. That's why you're seeing a lot of Chinese are investing here in the United States. And if you see the holding time that they have with their properties, typically it's very, very long. Some of them are in excess of 15 to 20 years. So again, when we think of investment, we can't think this short term of buy now, sell tomorrow, and make, you know, 1,000,000% return on my investment, right? We have to kind of have this understanding of time. So with all that being said, I hope that you enjoyed today's market update. If you want any of these sources, just go ahead and contact me. I'll be more than happy to send them to you. No obligations, no nothing. And again, just be positive, be optimistic. I think we're almost done with this, and we're going to go back to somewhat normal. So with all that, have an awesome afternoon, day, and I'll see you on the next video.